guys, TommyBryson here, and as you guys know, one of the hardest things to figure out is basically whenever you have a stock and you're making money on it or losing money on it, when is it time to actually go ahead and sell it? When do you go ahead and basically cut your losses, or for example, cut your profits and call it a day? When do you throw in the flag exactly? And that's why in this video today, I'm going to give you guys 5 signs that it's time to actually go ahead and sell an investment to make a profit, or for example, to go ahead and cut your losses. And usually, guys, okay, just a very common rule when it comes to investing, you never want to go ahead and sell your winners to keep your losers and hope that they actually go up in value. It's like having a garden with flowers and weeds, and you cut the flowers and keep the weeds and allow them to grow even further and further to build mass destruction. Usually, you want to cut your losses and then keep those flowers to allow them to keep growing and growing and growing. By the way, flowers is a metaphor for the winners in your portfolio. Now, if you guys are new here, guys, I post videos every single day, so make sure also subscribe, hit the bell so you're notified. On top of that, also destroy the like button. Now, the first principle I do have to break down when it comes to investing, so that way everyone here is on the same page, is basically what investing basically is, okay? Whenever you're going ahead and you're buying a stock, you're not buying a ticker symbol that goes up and down. You're buying a business, a real business with financial statements, with real customers and real services, okay? So your job as an investor is to see exactly the financial health of the company, the customers, how they feel about the company, and also the service they offer and how good that service actually is. And also, you're not looking at a chart for patterns. Oh my gosh, it went up last Tuesday and today is Tuesday, so guess what? It's gonna go up. No, the answer is no, you don't do that, okay? You're looking at a business with real financial numbers, with real customers, real services, so that is what you basically want to analyze. So let's say, for example, let's say you actually want to go ahead and buy a restaurant, and this restaurant has one location and happens to be in the stock market actually trading. The answer is, by the way, that's almost impossible. It won't happen ever, but just for simplicity here, what do you do? Do you go ahead and buy that stock based on what they're actually trading it for? The answer is no. You go ahead and you analyze the company as a whole. You say, for example, hey, how's the management in that restaurant? Are they good? Are they bad? Are they doing a great job? Hey, how are the financial sheets, okay? Is the balance sheet actually good? Do they have a lot of assets? Do they have a lot of debt? What exactly is going on there? What about the cash flow statement and the income statement to compare the financial health of the company? The answer is you take a look at all those factors, including, for example, hey, how do customers feel about this restaurant? So in some cases, you might want to go ahead and visit the restaurant to see exactly how the service is overall. And on top of that, there's another restaurant down the block. What makes your restaurant special? What gives it a competitive edge? You want to analyze all those factors and then come up with basically a target price and what the price for that stock should actually be. And then you compare it to basically what it's selling for in the market. Sometimes it's going to be overvalued, which then you might just want to go ahead and say, hey, I skip. Sometimes it might be right around your target price and you might want to go ahead and buy if it meets your factors. And sometimes it might be undervalued, and that's when you want to go ahead and capture all that value really quickly, okay? So now that we understand exactly the factors when it comes to buying a stock and how to analyze it, let's talk about basically, okay, you bought the restaurant stock and you had it for a while now, and now you're thinking about basically, hey, I want to actually sell it, but I don't know when it's time to actually go ahead and sell it. And usually the answer is you want to buy a company to hold on it forever, and then you want to go ahead and sell it when the time comes. But how do you know the time came, okay? Well, here are the 5 factors that you want to understand before you go ahead and sell the stock out of nowhere just based on intuition. And by the way, the worst thing ever is when you sell a stock saying, hey, the price isn't going to go up anymore, and then by next year it doubled in price, okay? That is the worst thing ever. Or for example, you say, hey, I'm losing money here, but it's fine, it's gonna go back up, and before you know it, you're down like 90% of all your money. Those are the 2 worst things that can happen, and that's why these factors right here are going to help you avoid those mistakes, okay? Now the very first sign or red flag that it's time to go ahead and sell that company or sell that stock is basically the management is doing a terrible job. Now, let's say, for example, you bought this restaurant, right? And the customers are usually young adults, right? So they're like more casual. They come in with dates. They go ahead, buy some burgers, buy some good food. Great. They love it, right? But now the management said, hey, we actually are going to go ahead and create some policies to actually increase revenues. But it turns out the management is pretty stupid. So what they do is this, okay? They have this restaurant where most of the customers are young adults and looking to have a good time and basically just eat some good food, have some drinks, and then just go ahead and go their own way. Well, the management said, hey, we're actually going to introduce a dress code. So if you don't come in with a suit and some really nice pants and basically shoes, the answer is you can't get into the restaurant. Well, right off the bat, guess what? 80% of the customers are no longer going to go there because basically they're young adults and they want to be casual. On top of that, the management said, hey, in order to increase revenue, we're going to go ahead and introduce a commission policy where basically the waiters make 10 to 20% on commissions based on the items they actually go ahead and sell to those customers. Now, they thought that was a good idea, but it turns out now the waiters are selling things that don't make any sense to those customers, and now the customers don't like the service anymore. So now you have a business that's failing because you have management that's doing pretty stupid things. And that's why whenever you go to a restaurant, the waiters don't get commission. They get tips, basically saying, hey, I want to make sure whatever I serve you and recommend are things you actually like so that I can go ahead and get a tip if I did a good job, right? I went to restaurants where basically the waiter said, hey, don't get that. That sucks. And guess what happens? That waiter goes ahead and gets a tip. Dress codes to alienate your customers is not a good idea either. Now, that's one red flag. And sometimes those red flags are going to be massive and you need to pay attention as an investor, okay? What is the management doing that might go ahead and cause the business to actually fail? Now, the second red flag is basically economics has changed the initial ideas you actually had about the business. For example, okay, let's say the world changes, I don't know, a pandemic happens, and now your restaurant is not having as much dine-in customers as usually. Now, what happens now, okay? This restaurant can go ahead and close down completely and say, hey, we're not gonna serve until things go back to normal, okay? We're not gonna do anything. Is that a good thing? The answer is most likely no. Because basically, if that restaurant rises above this and says, hey, you know what? We can't dine in, we get that, but let's go ahead and build our social media presence and go ahead and start doing a lot more deliveries and offering some discounts. That way, we keep that same flow of income until the world goes back to normal. Now, in some cases, guys, okay, the world is going to change so much where that business might become obsolete if they're not willing to go ahead and change and grow with the times. Tommy, what do you mean here? Well, a good example is this. Do any of you guys remember Blockbuster? And I can tell you one thing, okay? I don't. I was way too young back then. But the answer is Blockbuster was one of the biggest companies in the US when it came to renting movies and so on and so on. And Netflix, back in 2000, offered to sell Blockbuster, Netflix, for around $50 million. They said no. Today, Netflix is worth around $22 billion. Blockbuster is worth around $0, okay? Unless you like stole some DVDs and so on, that might be worth something to you. But the answer is the company is obsolete now. And sometimes that is going to happen. Some businesses, they're not willing to grow and change with the times, will become obsolete. Well, not all the way obsolete, but they will change forever. For example, Kodak. For example, Nokia. All companies that were really, really solid, and all of a sudden, they didn't change with the times, and before you know it, they got left behind. So always look at the economy and how that's going to go ahead and affect your business. But by the way, just because you're having a pandemic and things are going to be rough, sometimes you have to withhold all those rough waves to then go ahead and get back to normal. All the restaurants, airlines, all that stuff is going through something today. It does not mean it's going to stay like that forever. So sometimes you have to hold on. For example, guys, okay, a real example here. A few months ago, when basically airline stock was actually crashing, I went ahead and I bought some Delta stock at around 50% less. And today, the stocks I bought in Delta are up around 103%, meaning I actually doubled my money by investing into Delta. Because basically, I know for a fact, hey, are people going to keep eating at restaurants? Yes. Are people going to keep flying? The answer is yes. Will this ever go out of business? The answer is most likely no. But will it be damaging today? For the short term, the answer is yes. And maybe the long term, but eventually things will get back to normal. And that is a story I paint when it comes to airlines and also restaurants, okay? Now, the third red flag is basically if you made a mistake when you originally went ahead and bought that stock. Now, for example, you bought the restaurant. You think everything was fine, but it turns out, hey, The management is terrible. They're not willing to grow. Customers no longer like it. The competition is going to make them go bankrupt very quickly because basically the competition is a lot better than they actually are. So now you can either say, hey, I'm going to go ahead and hold on to see what happens, or just go ahead and cut your losses right then and there. And in that case, sometimes it's best to just go ahead and say, hey, the management sucks, the company sucks, competition is way better in that area, so I might as well go ahead and sell my stock for a loss, yes, but I'm going to go ahead and cut my losses because basically I made a mistake when I bought this stock initially. By the way, Warren Buffett made mistakes. Philip Fisher made mistakes. Peter Lynch made mistakes. I've made mistakes. Everyone, including you, is going to make a mistake at some point when it comes to investing. Although right now, all my investments are up, which is great, okay? All my investments right now are up. At some point, I will make a bad investment, and that's fine. But when that time comes, I don't put my ego there. I say, hey, I made a mistake. Time to cut my losses, call it a day, and go ahead and find the next stock. That is what you want to do. Now, on top of that, guys, the fourth reason is basically you found a more attractive stock out there that you actually want to invest into. Now, usually you only do this when you basically lack capital, meaning you don't have a lot of money and you basically need more money to go ahead and take advantage of a better opportunity that's going to offer you a better return to then go ahead and increase the amount of money you actually have overall to go ahead and invest. For example, when Warren Buffett first started investing, he had to go ahead and sell back and forth to then go ahead and buy a better opportunity because basically he lacked capital. But today, Warren Buffett makes around, I don't know, $100 million every single week. So now he doesn't have to do that. So when he finds an opportunity, he just goes ahead and invests into it, but doesn't have to go ahead and sell whatever he has. But if you have a good stock, but you found a better stock, but you don't have enough money, sometimes you have to go ahead and sell your least favorite stocks to then go ahead and buy a better stock, okay? Sometimes that happens, but you will get to a point when you have enough money when you no longer need to do that anymore, okay? Now, number 5, and the last flag you basically want to notice is basically, has this stock and this industry reached its plateau? Meaning, for example, it's not actually going to grow anymore, okay? For example, one of the best stocks back in the old days was basically AT&T. It was growing, things were going great, but today AT&T has plateaued and is just basically a dividend stock, okay? That's all it really is today, okay? So at some point, I should say, the stock you actually invested into, the industry you invested into is going to plateau. It's going to grow like this, okay? It grows exponentially. And then it gets to a point where basically it gets harder and harder to actually grow, and then it plateaus. And it goes like this. And it goes like this. And when something plateaus, it can only go down. Okay? And you might want to say, hey, do I hold on for the long term and just keep holding on, keep getting dividends, and accumulating some like little grow? Or for example, do I go ahead and sell and buy another opportunity that's going to go further and further and further? And if you want to do that technique right there, I recommend you research Peter Lynch and read his books because basically he is an expert when it comes to, hey, has this company reached its peak and do I want to go ahead and sell it and grab that money and put it into something else that is going to give me more and more money? That is the idea, guys, okay? But overall, guys, those are 5 signs that it's time to go ahead and sell your stock. But notice I didn't say, hey, Yahoo said sell, the analyst said sell, people said sell, oh, my friend said sell. None of that stuff matters. All that matters is basically the overall business and what changes actually happen, and if that's a factor to actually go ahead and sell. And overall, guys, one last thing is this. These ideas, although they are great, they are not mine. All I am is a 23-year-old that's investing and is doing great, yes, but it's because basically I follow the words of people that are much smarter than me. For example, these ideas come from Warren Buffett, Philip Fisher, and also Peter Lynch, all investors that I look up to, and I highly recommend you read their material because that is how I became the investor I basically am today. So I highly recommend read Warren Buffett's book, or what he recommends because he doesn't have a book, and on top of that, read Philip Fisher's books and also Peter Lynch's book. They do great if you want to become an investor. But overall, guys, that's about it for this video. Thanks for watching, and as always, if you like this video right here, guys, well, like this video. On top of that, also subscribe and hit the bell so you're notified. And before I go, if you want to text me or talk to me, join my Patreon, link down below, or send me a DM on Instagram at TommyBryson. And before I go, if you want to see exactly how I invest, in what I invest, and so on, here's that video right here, and click my face right now. I'll see you guys tomorrow. Thanks for watching, and as always, peace.